Yeah, Baxter, tell us a little bit, I guess, your background and the thing about Apollo and what you're doing now,
Yeah,
and then we could
happy
tell
to.
us what we're doing.
Yeah, so I graduated from Lehigh in 2013. I immediately went into investment banking. I started at a healthcare investment bank called Leerink Swan, which then became Leerink Partners and now is owned by SVB Leerink. I realized pretty quickly that I was much more interested in M&A and restructuring. And so I left Leerink and joined a boutique investment bank called Moelis and Company, which was started kind of around the great financial crisis by a guy named Ken Moelis, who used to be a very senior banker at UBS. I was at Moelis for about 2 years, focusing on M&A and restructuring. Closed a handful of multi-billion dollar transactions, and decided that I wanted to go into investing full time. I was less interested actually in joining very large investment companies. I was more focused on trying to get much more hands-on experience in the kind of lower middle market private equity environment. And so started kind of interviewing at a series of different firms and funds. I found my way to Victory Park Capital, which kind of spun out from a big hedge fund in Chicago called Magnetar Capital, run by kind of very entrepreneurial young guys. They'd had a lot of success. They were founded in 2007. By the time I joined in 2014, they were managing about $2 billion. I had two kind of key roles at Victory Park. One was to invest in fintech companies. And the second was kind of more of a special sits type role. So, that includes everything from distressed debt to distressed buyouts to structured equity, which, we can kind of talk about all these different categories. But really, at that point in the fintech environment, kind of got up close and personal of, what is a fintech business? What are the different modes of operation? How are these businesses built? And what's most interesting about them, and how can they transform the landscape? At that time, it was probably the first inning within fintech. Fintech really was born coming out of the great financial crisis. Given Dodd-Frank and a number of other regulatory hurdles, banks now no longer could really lend and could not distribute their products as efficiently as they previously could. And so it was an interesting time. I ultimately, because I was less interested in fintech at the time, for a number of reasons that I can get into, I left and joined Apollo Global, which is a $500 billion private equity business. I invested in technology companies at Apollo for about 4 years. I was a principal on one of their flagship vehicles, which was more of a kind of special sits style of investing, which is kind of in line with how Apollo generally invests in the market, which is very kind of credit oriented, value oriented investing, investment style that you don't necessarily see in this environment. Well, I guess you see it now in this environment, but previously in the bull market that we just kind of exited, you never really saw. And I was at Apollo for about 4 years. And then, identified an opportunity in the fintech market within online lending. And so left Apollo about a year ago to build my current business, Alernative. In a nutshell, we are a team of 10 right now, 7 on the engineering and technology side, 3 on the operations side. We've just launched 2 products in market this month or last month, and are kind of receiving a tremendous amount of customer support and feedback. That's quite positive, so we'll be raising more capital here in the next 3 to 6 months, probably. But in a nutshell, we are kind of reimagining financial services, beginning with lending. The idea is really to simplify and streamline all lending products, to either small businesses or early stage and late stage VC-backed companies. And we do that in an assortment of different ways that I can kind of get into. But we're taking a pretty differentiated approach in the market today, and are building that business from the ground up.
Great. You know what? Well, to give you a better feel as to what we do, maybe let me get 3 students to tell you very quickly, like in 5 minutes, the type of projects they're working on. Because what I focus on this program is there is a curriculum, right? But that's but the curriculum is kind of the same everywhere. What I'm trying to emphasize more here is going to be project works, which where they learn stuff that they haven't done, and maybe Jack at some point we could talk about your project. But also internships, right? Getting them out there more to learn what's really going on, and actually having an actual curriculum sitting next to the existing curriculum. So, Charles, why don't you tell us about that interest, your
Yeah,
wave
so I'll
thing?
hop in right now. So I kind of have an idea to model asset prices as waves. And it was really open-ended when I started it. But now what it looks like it's going to form into is really just a souped up pairs trading strategy. It's and using that to then trade on the pairs. It's just going to be a model, excuse me, to trade on the pairs using something called the Hurst exponent and the LPPLS model. Let's just say that because that's a really long name. The abbreviation is much easier to handle. Using those two things in conjunction, along with some other like actual wave models or wave functions, is where we're at right now. Right now, I have a working algorithm just using the Hurst exponent for the pairs trading. And then now I'm basically going to be testing, adding in the LPPLS and the wave models and testing along there. That's what I'm doing. And I'm also part of multi-factor as well, where we're basically an open-ended factor investing. We're testing a bunch of factor investing models.
And Baxter, just to be clear, even though Charles is working on this project, he's not just, he's not alone. I mean, all our projects have corporate sponsors. Like in this case, he's working with an algo trading firm out of India. The one with the multi-factor investing is with someone in Philadelphia, Hamilton Lane, which was a previous MFE student. Jack, do you want to? He has to hear about yours.
Yeah, hi. I'm Jack. My project is in conjunction with Jack Gill and Michael Nelson, who my understanding is, we're working on something we have kind of come together and call it's like a algorithmic sports trading idea, where it's like, okay, we have legalized sports gambling in the United States. Can we put an algo on it and make money with it? Like, is the idea of like, can we see where, we might have markets acting differently between sports books and try and exploit that? So what we do specifically is we look for, we call it an interbook arb, or just some kind of misprice between two different books, which happens more often than you'd think. And then we try and take opposite ends of each trade, essentially another pairs trade, and construct what looks like an option spread out of these positions. So we've been able to back test it, and it's actually performed fairly well. Fairly well as in it created return that was positive and not negative. So we'll start there. And we're just kind of, refining things from there. So part of that was what Jack Gill did was he built a very extensive web scraper to go to all the different sports books and pull market data through time. And store data. What Michael Nelson did was a lot of data consolidation and then just general backtesting strategy. And then what I did was more of the math end of it, which was fitting distributions to player performance and trying to use player performance to price positions within the back tests and live tests that we have. So in my case, if we have a certain position that pays out X amount of dollars with probability P and loses Y amount of dollars with probability 1 minus P, try and combine all those positions together and see what a portfolio looks like and that kind of thing. So it's been really interesting, learned a lot technically, but also like it's been, fun to talk about and explore as a market. So,
and you guys work with Ben Stein from BNP Asset Management.
Yes.
I actually,
Well,
Ben,
he's somewhere else now. He's
what is
some
that?
AI place.
Yeah, algorithm Lehigh? No, what's the word? I forgot. It was an
Algo
interesting.
AI maybe. I don't know.
It was an interesting word. Yeren, you also worked some interesting project with Ariam Testad, who wrote a book on machine learning. Maybe the thing about financial equation
Yeah, sure.
and the blockchain.
Right now I'm working on at least two of the projects. The last one was financial equation. Now it's working by another group of students still in our program. Basically, what we are doing is trying to use the AI Feynman package. It's an open source Python package for symbolic regression on financial equations. So that's the gist of it. So the process is roughly, first of all, we take the well-known financial equations like compound interest, that's the most simple one, like pump pricing, Black-Scholes, and then try to generate the data that we can fit into the model and to let the model find the closed form mathematics equation for the outcome. So to see if we can generate insight from there. And then the next step, I believe the current group students are doing is trying to fit with the real world data. Another project I'm doing right now is
all right, what's the goal of that project exactly?
It's also sort of open-ended, but I think it's at this time it's very preliminary. But at the end, we are trying to see if the symbolic regression is going to give us insight into, what some interpretability for some of the things that are happening in the market, and also if it's gonna give us some simpler form of insight that is going to explain or going to, for example, we can use that for fraud detection because we don't have some of kind of equation over there to give us insight into to explain these kind of activities.
Interesting. I mean, I think one of the things that I think is really interesting about the difference between an academic setting and the real world, and I've worked at big small firms, is like an academic setting is actually typically much more complicated than a real world setting. Like in the real world, people care about making money, right?
Yes.
So they try to dumb everything down to how do I make money based off of what I'm doing. And that's now, people are in this class for the whole different number of reasons, right? I mean, making money may not be the driver of your experience. And that's great. Fraud prevention, may be a separate strategy to generate a profit, but you're really interested in, working to find and fix and create a better solution in the world from a technology standpoint. And I think one of the things that I think everybody in any of these classes or, whatever should be aware of is like, well, taking a macro perspective on like any of these specific categories is typically a lot less beneficial or less helpful than trying to drill down into, okay, I really want to figure out this fraud model. Now, how do I solve that specific problem? Because, like Jack brought up a good example of the sports betting, business that he's working on. Like people are doing that, right? People are trying to arb different sports books in a multitude of different ways. I played lacrosse at Lehigh. People are trying to arb the Lehigh lacrosse games. Like it's ridiculous, right? But if you can then take your sports book model and now apply it to lacrosse, which is a more illiquid, esoteric, niche betting market, then you probably can generate more alpha and a larger return on that specific model, because you're going to be much more refined and have so much more precision. So what I'd advise everybody on any of these projects is always to think about, like, what is the edge that I have as an individual or as a team? You know, the reason why I started my fintech business was because I sat on the boards of a number of fintech companies in 2014, 2015, 2016. Like, I invested hundreds of millions of dollars in fintech companies 5 years ago. So why am I not well positioned to be successful and leave a, you know, high paying job at Apollo to build a fintech company and raise a bunch of capital? So whatever it is, I think, you know, having that kind of lens, I think will be helpful in terms of like not redirecting, but just directing to the next extent. But I know.
Yes, I mean, that's you know what, that's exactly what's going on. And that's the reason why, yes, academic research oriented projects are okay. But I want, and this is the idea for me to do these kind of internships, kind of co-ops, where working with actual practitioners. In fact, I do. Hey, Brian, are you with us?
Yep, I'm with us.
Okay, you're with us. I mean, obviously, Brian is working on a natural language processing project with an actual firm for direct. I mean, he can't really talk too much about the details of it, right? Because we sign a disclosure agreement. But the idea there is to work with a firm like yourself, right? Where you have a specific issue you want to resolve and you want a bunch of people to think about it. That is where I'm trying to go to, so it cuts the fat out of all the work, and you just focus on making money or helping somebody else making money, which is very good because it helps you, it helps focus, your effort. Brian, you want to say something about that? Without being too detailed.
Quick background about myself. My name is Brian, out of Connecticut here. Graduating in the spring. I formerly part-time sit on a data science desk at one of the big manufacturing companies. I've been on a multitude of projects in mostly the financial data science space, and what I can say is, on the really academic side, it's cool when you get a paper published. But not everyone is very receptive. Not everyone can speak the language, which is totally fine. And at the end of the day, the person cutting the check, if he or she doesn't understand what's going on, none of that really matters.
Which it did, by the way, Brian, right? Your paper, the work on interpretability and reinforcement was published. That was part of the project.
Well, yeah, and I think the takeaway there is not the fact that it's published, but the fact, right, you take a bunch of complicated ideas and you distill it into something that someone can understand. A 5-year-old can understand at the dinner table. Yep. And that sometimes gets lost in academics. And Baxter, I'm sure, right? When the deal's being signed, if no one understands what's going on in very simple terms, no one's cutting any checks anytime soon. So that ability, I think, is also I think it's more important than just, can you develop the most insane out of this world algorithm that's PhD level stuff. That's cool and all, but if no one's going to buy it, it's pretty useless. So that's kind of my 2 cents there.
Can you talk about the NLP?
Yeah, sure. So we're working, as Patrick here introduced, working with a fund out of New Jersey, where basically the idea is it's a data mining exercise is really what it is. Looking at specific parts of various financial documents, SEC filings, over time of S&P 500 components, and basically throwing natural language processing techniques at the data to mine insights. And so the idea there is just to create more factors. The more factors that you could possibly look at, whether it's sentiment analysis, whether it's legitimately counting the amount of times they say the word customer in a certain, apologies here, in a certain section of an SEC filing. That's kind of the idea there. And the idea there is to create a database for them. So then their data scientists and their quants can begin to develop correlations between this quote unquote synthetically mined data and returns. And if there's a mapping there, right, then that becomes a new factor into their models.
And it's specific for industrial?
No. This is
More broad.
specific. This is not industrial specific. This is, we literally took a bunch of SEC filings over the course of 40 years on almost every single component of the S&P 500 over time, and regardless of what sector, if that makes sense.
Yeah, no, it makes sense. And I mean, it's all about data extraction, right? And then the question is, well, like, is there any signal or alpha to be generated? I think, for us, one of the things that we're building and trying to evaluate is we get a lot of credit card data. And Jack may be familiar with this through the other Jack and Michael, but and for us, what we have to do is we have to extract data from, or it's not credit card data, it's bank account data. We have to extract data from bank account data to better understand who the company's customers are, who the company's vendors are, et cetera. Now, the challenge with that is that, we may be able to extract a customer or extract a vendor, but we then need to figure out, well, who the heck is that vendor? Who the heck is that customer? Like, who is Lehigh? Or who is, this industrial company? Or who is this hedge fund based in New Jersey? And it's actually, quite a challenging thing to solve. Now, there are ways to solve it. You could create a data dictionary of all the companies within this kind of ecosystem or universe, cross-reference those companies, pick out what industry they are or what they do, and then load that into the model. But this is, we work on these types of things all the time. And I think, as we transition here, and as, if people are interested, in the work that we do, happy to have a conversation, because, we do have, our team is small right now. But there's a lot to do, and I would say it's very data oriented, and it's very targeted towards providing access and democratizing access to capital for, companies that previously couldn't get capital. But that's awesome.
Absolutely. Happy to chat off.
Yeah, sure. That's why Baxter, the more I learn about what you do, I think we could do something here. And finally, I just wanted to bring up Remus. He's a first-year student and working in it's kind of a breakthrough, because we never had an index at Lehigh. So Remus, why don't you explain to you what you guys did?
Yeah, so basically right now we're working with someone who is who used to work for the S&P 500, and then basically what we did is trying to create an index that tracks the performance, or let's just say the economical trend in Pennsylvania. So we basically target and filter out all the company that's had the headquarter in Pennsylvania by using Bloomberg, and also we created a streamline to trying to get it automated. I think that is one of the most important and also the challenging part. But we have the product, and also we have the product and a chart from last summer, but right now we're basically exploring more idea of how we should do what kind of method should we use? Do we do the price weighted, or are we using the capital market weighted? And right now, just doing a lot of exploratory work and trying to, just trying to make our allocation and just trying to make our weighted method a little bit better.
Yeah, actually, when you say you work with someone, it's not just someone. He was the CEO of Dow Jones Indices and S&P, so he's got some experience.
Right.
Okay. Any question for Baxter? Oh, I'm sorry, Baxter. Go ahead.
No, I was just gonna say cool.
Yeah. Any question for Baxter? I know he's probably busy and. Okay.
Yeah.
Oh, wait.
Never mind.
No, go for it, Brian. I
Go
like
for it, Brian.
questions.
Got it.
It better be a good question though.
I hope it is. I guess a little bit, I've done a little bit of research here. Can you talk a little bit about sort of the modeling, the data science modeling aspect that you guys are doing, and a little bit about the alternative data sets, if you can, that is, and what that may look like for you guys?